Hey everyone, welcome back to Corporate Decoder, the place where we help you understand what really drives the companies you invest in and what secrets their filings might be hiding. Today we're diving into M.I. Homes' July 23rd, 2025 report. And let's just say there's a lot to unpack in the world of home building right now. We're going to cut through the jargon and get to the bottom of what these numbers actually mean for M.I. Homes. Alright, so we're looking at a routine update from M. Dicene Homes, a company that builds and sells homes across the US. This filing essentially tells us what's happening behind the scenes with their finances. It's super important for anyone trying to understand the real health of the company. The main event here is that M. Homes put out a press release on July 23rd, 2025, sharing their financial results for the first half of the year, specifically for the 3 and 6 month periods ending June 30th, 2025. This is where the real story usually is, telling us how they're performing. We're going to focus on the key takeaways from that report. Now, this press release is the most important exhibit attached to this filing, and it's our window into their recent performance. Companies like M. Homes usually release these to keep investors updated. Think of it like a quarterly checkup report for the business. Let's talk about what they're showing us. While this report is a bit light on specific numbers within the document itself, it points us to an attached press release, usually packed with the juicy financial details. The good news is that M. Homes is a publicly traded company on the New York Stock Exchange, so their performance is regularly scrutinized. They're trading under the MHO symbol. Understanding M. Homes' performance means looking at how they are selling homes, what their costs are, and how much profit they are keeping. In the home building sector, we always want to see strong sales, controlled costs, and good profit margins. A lot depends on interest rates, the availability of labor and materials, and general consumer confidence. High interest rates, for instance, can make mortgages more expensive, which can slow down home sales. Conversely, when rates are low, more people can afford to buy homes, boosting the business. When we look at a report like this, we're essentially trying to answer a few key questions. Are they selling more homes than before? Are their costs going up faster than their sales? And importantly, are they making more money overall, or are their profits shrinking? These are the kinds of things that tell us if the company is growing stronger or weaker. Let's put on our investor hats and think about what M. Homes might be experiencing. For example, if they reported that their revenue from home sales increased by a good chunk, say 15% compared to the same time last year, that's a strong signal that they're selling more houses or selling them at higher prices. But if their cost of sales also jumped even higher, maybe 20%, then that would mean their profit margin is actually shrinking, which isn't as good a sign. Even if sales are up, it's like selling more cars, but having to spend a lot more on each car, which eats into your profit. What we'd really want to see in that press release are numbers about their backlog of homes to be built and delivered, their average selling price, and their gross profit margin on home sales. A rising backlog suggests strong future demand, while a higher average selling price indicates they can either command better prices or are selling more expensive homes. A healthy gross profit margin shows they're managing their construction costs effectively. For M. Homes, like any builder, managing inventory is also key. Are they building homes that are selling quickly, or are they getting stuck with unsold inventory that costs them money to hold? This is a crucial factor in volatile markets. The press release would likely touch on how efficiently they are turning over their inventory, meaning how quickly they're selling the homes they build. Now, it's important to remember that this filing is just a snapshot. The attached press release gives us the most current picture, but for a complete understanding, you'd want to look at their full quarterly reports, the 10Q, and their annual reports, the 10K, to see the longer-term trends. These reports often discuss the company's strategy, risks they face, and their outlook for the future. For instance, they might talk about expanding into new markets, investing in new technologies, or facing challenges from national economic policies. When we look at the housing market broadly, trends like urbanization, the demand for affordable housing, and shifts in remote work policies can all significantly impact builders like M. Homes. Are they positioned to capitalize on these trends? For example, if remote work is encouraging people to move to less densely populated areas, M. Homes might be strategically building in those regions. Looking at the securities registered here, the common shares of MT Homes Inc. are traded on the New York Stock Exchange. This means they are subject to the rules and regulations of the Stock Exchange and the SEC, ensuring a certain level of transparency. In essence, this filing for MTED Homes is a confirmation that they are actively communicating their recent financial performance to the public. The real value lies in the details contained within the linked press release, which hopefully paints a clear picture of their sales profitability and overall financial health in the current housing market. Now, let's consider the broader picture. M2 Homes operates in a cyclical industry. Their success is tied to economic conditions, interest rates, and consumer confidence. If interest rates are rising, as they have been recently, this can put a damper on new home sales. Buyers might hesitate if their mortgage payments become significantly higher. However, if there's still a strong underlying demand for housing, and Emive Homes is managing its costs well, they could still perform strongly. We'd be looking for indications in their sales figures that they are either increasing prices or selling more units, or ideally both. A company that can consistently grow its top line, meaning its revenue, and manage its expenses to grow its bottom line, its profit, is generally a healthy company. For Emive Homes, we want to see that they are not just selling houses, but selling them profitably and building a strong future. So what's my take on this? Emive Homes, by filing this report and attaching their press release, is doing what it should. The true test, however, lies in the actual numbers presented in that press release. Are they showing robust sales growth? Are they maintaining healthy profit margins despite economic headwinds? Are they managing their debt effectively? These are the questions an investor needs answered. The home building sector is sensitive to economic shifts, and Emive Homes are always present. It's a balancing act, and where they land will depend on their execution and the market's conditions. The market's conditions, Buffett's conditions, and homes are always present. It's a balancing act, and where they land will depend on their execution and market's conditions. The market's conditions after can keep their costs in check and tap into housing demand, but the risks of rising interest rates and potential economic slowdowns are always present. It's a balancing act, and where they land will depend on their execution and the market. Alright, that's our breakdown of Emive Homes disclosure. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.